Leave without pay may be granted to a federal employee for various reasons. In this video, we'll discuss how extended periods of unpaid leave may impact your federal benefits. That's coming up, so stay tuned. Hey, welcome to the Money Briefing. My name is Jarrell Harvey and I'm with Fedway Financial. On this channel, we cover topics related to personal finance, federal benefits, and retirement planning. So if you're new to our channel, please consider sharing and subscribing. As a federal employee, you have access to different forms of leave. And one of the options that you have is leave without pay, which is often called LWOP for short. Leave without pay is a temporary non-pay status in absence from work that can be used regardless of whether you have sick leave or annual leave available. Typically, LWOP is granted by supervisors on a case-by-case basis at the request of an employee. Some agencies have their own policies for granting LWOP status, but there are several situations in which federal workers are entitled to this leave option. One reason is for family and medical purposes. Even though federal employees are allowed up to 12 weeks of paid leave for the birth or placement of a new child, there are other conditions that come under the Family and Medical Leave Act, which is also known as FMLA, that allow employees to take up to 12 weeks of unpaid leave each year. Another situation is federal employees who are called up for periods of service in the reserves or National Guard. Also, disabled veterans who need medical treatment is a third case that is entitled to leave without pay status. And lastly, employees receiving workers' compensation benefits for on-site injuries are authorized to take extended unpaid leave. When you're on leave without pay, some federal benefits may be affected. So I want to cover the impact of LWOP on your service time for retirement, your different insurance coverages, and your thrift savings plan. I also want to point out there are some differences in how benefits are applied when you're on leave without pay due to active military duty. Because of the number of variations and differences, our discussion will mainly focus on leave without pay for causes outside of military active duty. So let's cover LWOP's impact on your retirement pension first. Generally, if you take 6 months or less of unpaid leave in any calendar year, you will get credit for that time for retirement purposes. So in other words, your years of service for your pension calculation will not be affected unless you spend more than 6 months in non-pay status. Another good thing is that you don't have to make a deposit or payment to the retirement fund to get that credible service. On the other hand, any period of leave without pay that exceeds 6 months in a calendar year isn't credible, and you're not allowed to make a deposit to get credit for it. Also, you will not earn any annual leave or sick leave for a pay period in which you reach a total of 80 hours of LWOP. Those 80 hours can be accumulated in one pay period or over the course of multiple pay periods. But the loss of leave will only occur in the pay period that the 80 hours is reached. For example, let's consider a full-time employee who is in the 8-hour annual leave accrual category and who has accumulated and reached 80 hours of non-pay status during the most recent pay period. That employee will forfeit a total of 12 hours of leave in that pay period, which consists of 8 hours of annual leave and 4 hours of sick leave. Let's now discuss your different forms of insurance coverage. Under LWOP, your enrollment in the FEHB program can continue for up to 1 year, so 365 days is the max. While you're on unpaid leave, the government continues to pay its portion of the premium cost. The government is also responsible for advancing your share of the premium as well. You have the option to choose between paying your agency directly on a pay-as-you-go basis or having the premiums accumulate and later withheld from your future pay when you return to work. If you return to pay status for more than 4 months, the 365-day clock restarts in case you need to go on leave without pay again. If you have a flexible spending account, your healthcare expenses will not be reimbursed until you return to a pay status and your allotments are successfully restarted. If you have dental and vision insurance or long-term care insurance, your coverage can also be continued, but you will be responsible for paying those premium bills directly to the providers. And as for your life insurance under Fedway, you can keep your coverage up to 1 year. The key difference is that you will not be required to pay anything for that coverage. And lastly, I want to discuss the Thrift Savings Plan. When you're on leave without pay, you cannot contribute to the TSP and your agency stops contributions as well. But you can make changes to your allocation and perform fund transfers inside your account. While on LWOP, you're not eligible for a new loan from your TSP. If you have an existing loan, your loan payment will be suspended until you return to work, but the suspension cannot go beyond 1 year. It's also important to note that interest will still accrue on your loan while it's suspended, and the suspension will not extend your loan repayment period. Instead, when you return to work, your loan will be recalculated and you'll have a new payment amount. Even though you can't take a loan, you can make an in-service withdrawal as long as you meet the age and financial hardship requirements. If you have to go on leave without pay due to personal or medical needs, or if you choose to take extended unpaid leave to pursue personal interests or goals, it's important to understand how it will affect your various federal benefits. If you received any value from this video, please click the like button. You can also subscribe to our channel to get more content like this. If you have any comments or questions about federal benefits or retirement planning, you can add them down in the comment section below, or you can contact us by visiting our website at www.fedwayfinancial.com. Thank you for watching, and we'll see you on the next Money Briefing.